Hey, Anthony Blake says he's recording, so for whoever couldn't make it, should be able to rewatch it later whenever he drops that link. That's what's up. New Jersey, Philly, San Antonio, Bahamas. That's what's up. I used to live there when I was a kid for about 2 or 3 years. Yeah, a lot of Texas in here. I'm actually from Jamaica originally. That's where I was born. Me and Q got that in common. Cocoa Beach, hey, Washington D.C. That's what's up. My brother, older brother's in Washington D.C. He actually just graduated from university with his second degree. Jamaica born and raised. Yaman. Miami. Yeah, I love Miami. That's where I grew up for a good part of my middle school and high school before I came up here by Orlando. Yeah, Washington Caddy all over the world, man. I'm gonna go ahead and give it a couple more minutes just to see if we can get more people in before I go ahead and start breaking the market structure down. What pairs you guys want to start off? I mean, I know you guys mostly trade UJ. I don't really trade UJ at all, so but I mean, I know a lot of you guys trade UJ. But we can get a general consensus of what pairs people want to break, want to start with first. I try to go over about 2 to 3 pairs in this webinar. A lot of people saying GU, GJ. I see some stuff for AU, USD, MXN. Can we do a breakdown of Ripple? Someone says my favorite pairs. My favorite pairs are. I have a couple. I have my watch list. So my primary pairs are these four: Euro JPY, GJ, GU, and GA. And my secondary pairs are EU, AU. Damn, that shit crushed. Um, UJ, I don't trade all that often anymore, but it did have a really nice movement. 30 something pips, beautiful. Now look at Ripple and I look at BTC a little bit, and a little bit of Euro GBP. All right, so we got about 75 people in. I'm gonna go ahead and get started. Let me pull up GJ.
She paid us well this week.
First of all, let me go to a daily time frame. What do I mean? My secondary pair is just my primary pairs are what I trade on a day-to-day basis. My secondary pairs are what I look at if I don't see any setups on my primary pairs that I trade. So if my primary pairs are in consolidation or I don't see any moves right away, I flip over to my secondary watch list, my pairs, and I'll look to see if the market's doing anything on those. I could potentially have a setup. A lot of my pairs have a lot of correlation, so they literally move in the same directions together. Like EU, GU, AU, they all move in the same direction, like 90% of the time. So GU's is a buy move, then 9 times out of 10, I'm gonna be looking at AU and Euro USD for a buy move. So yeah, I'll go with my sell on the EU. Let's see. Somebody said they want to see. I heard a lot of people say GJ, so I'll just start with GJ for a quick second. You guys can see basically how I have my levels laid out weekly, monthly. Um, the way I get my levels is I take a area in the market. I always get a monthly time frame, and I take an area in the market where price like pretty much like consolidated a little bit in a range off of the monthly time frame. And what I'll do, I'll measure that out. So to see this box here, I had to measure out a range. It's like where range it came from. What is it? range was it? I think this might have been my range. Yeah, something like that. Yeah, I forgot where it was exactly where I found it. Anyways, if you wanted to do it, like on any other pair, you can just take a range. So you can do something like get my tool. Where's my? There it is. I can say, okay, price found resistance here, and it found support here, and this is the monthly time frame. So pretty much it bounced back and forth in between support and this monthly level. I can just take that, measure it as my range, and then all I would do is just plot a monthly level at the top of this, monthly at the top of this, and then just drag it down, draw another level here at the bottom, put it down, another level here at the bottom, drag it down, another level here at the bottom, and that is how I get my monthly levels. Like this, it works very accurately. If you guys want to go ahead and try it out, let me pull up like NZD just a random pair, just so I could demonstrate that to you guys. Let's see, drawing tools. Let's see if I can find a nice little range. This isn't a very, this isn't a pair that moves. Let me see. Yeah, I'll take this. So just like that. Let me see, was that a good enough range? Yeah, I feel like I found a better one. Not much data on this monthly chart. Anyways, this is just to give an example of how I it doesn't have to be one. No, it doesn't have to be 1,000. It just has to be underneath 1,000. Like I said, some pairs don't have a daily average range of 1,000 plus pips. So you have a monthly level of 1,000 pips apart on smaller pairs. It's not gonna do you any good. It's not gonna be as accurate as it could be. You know what I mean? Definitely not gonna be as accurate as it could be. So I was have something like this once again. I'm just showing you how I get my monthly levels. All right, so I got like that 400 some pips, which is fine because NU and EU don't have the NU and AU don't have that big of a range. So
Bro, do you use that for crypto as well?
I use this for who?
For labeling crypto like monthly
No,
levels.
no, I would recommend using the crypto because first of all, there's not enough data on crypto on the monthly charts for you to even do this. Like crypto just been one huge spike up and one huge spike down. So crypto, I mean, I just trade crypto off of H4. I get my levels off of H4, and I just follow a structure. I don't really plot levels on crypto just because the pip range is so vast, it's so massive. It's like there's no real no real way to get a daily average range from it. You never know what you can expect from Ripple or BTC. Anyways, just doing this, you guys see how I just plot these two lines, and once again, using that same. Using that same, you see how prices pretty much been respecting these levels, right? All I did was get it from this little consolidation area right there. All that, see how price was respecting this. Once again, create this level, price respected it. Like all that just from getting that one little thing. So this is like so this how I draw my monthly levels. It's already pretty much plotted out on my charts, but I just want to show you guys real quick before I switch to like a trading time frame. And then I just use the halfway point in between to get my weekly levels. So this will be a weekly level, this will be a monthly level, pretty much. So that's how I do that. And then with the test these levels, make sure they're plotted correctly. Not really that I know of. It's like I said, it's basically just finding like that perfect range. You know when you find it, because I've drawn my levels sometimes, and I've been trading. I'm like, you know what? I don't like the look of the levels. I don't feel like they're too wide apart. You know what I mean? So I just clear off all my charts and redraw find a different range of consolidation and draw the levels and just make sure it's underneath 1,000 pips. So it's just something you got to play with to get good at. Keep on doing it. Like when I did the ones on GJ, My first 2 times around, I didn't have it correct, but I feel like this now is pretty solid. So I keep these as my monthly levels on my weekly levels. I go to EJ, you see the same thing. You see how prices are respecting all this stuff literally to it, like literally down to the T. But as your eye for the market gets good enough, you'll be able to get it down right. Nah, I don't have multiple charts for the same period. I just use one chart for one chart for everything. Once I got my monthly levels, I go into weekly time frame. I draw a couple of trend lines. I look what my overall bias should be, whether I'm bullish, whether I'm bearish, if price making lower highs, lower lows, etc. Draw a couple of trend lines to where the most relative price action is, and then once I have that, I go down to a daily time frame. And then from daily time frame, I start analyzing. That's pretty much how I do that. So anyways, let me go back to GJ. Somebody wanted to know. Well, I said I was gonna break down this sell move on GJ. Just looking at this, I think this should be pretty self-explanatory to you guys. I'm not sure if you guys know of what's of exhaustion zones. You should, because Q talks about exhaustion zones all the time. Candlestick exhaustion, but I took it one step farther and highlighting the zones where in recent price action, price showed seller exhaustion wicks as my way of highlighting supply and demand zones in the market. So I highlight my daily zones first. I highlight my um H4 zones next, pretty much. So if you guys look in here, you'll see, okay, right when price was rallying down, it made this pullback. This was a lower high point, probably like a 38.2 or 50 from here to here, right? And as it left this area, it had a lot of seller exhaustion identified by this wick. So this automatically lets me know this is a strong area of the market where there's a lot of sellers, where there's a lot of supply. Chances are, the market comes back up into this area, it's gonna drop, which is exactly what it did. Right? Same thing here for my buy zone. Price came back down. You had a major exhaustion here, another exhaustion candle wick here. The market shot up. Once again, I highlight this area. This automatically lets me know, okay, yeah, there's a lot of demand in this area. Buyers are willing to come to the market in this area. And so if price comes down here, I need to go and look out for a reversal, which is exactly what happened. This was pretty much like a big ass swing trade. I didn't swing all of it completely. I was in and out on a couple of waves. But nonetheless, you can see that here we have a double bottom on H4, right? Price came back in here, bullish engulfing on H4, right off that same zone. So this is where that zone hold on one second. Can you guys hear me?
Yes, bro.
Oh, okay.
Yeah.
Pretty clear.
Saying unmute yourself. I was like, what? I didn't realize I was muted. Okay, my bad. Let me make sure. Let me know if you guys can still hear me. If you ever can't hear me, just like type it in the chat. So I'm just to make sure everything's okay. All right, so let's go from the recent sell, most recent price action. Here we have a semi-head and shoulders pattern, right? Price came up into that zone I had highlighted off the daily. And if I zoom down to a lower time frame off the H1, you see it tap that area, bullish engulfing, and then dropped, right? There was a nice, if we're following this uptrend up, it's going after the major push points. We'll see here, market rallied up. This is one big push, pullback. One big push, minor pullback. One big push, pullback. Big push, drop. Now we're seeing that transition coming off of that zone. So if I'm trading, this would have been my last level of support established on the H1 time frame. You see price came up here, it stalled, my level of support, rejected this, bullish engulfing, it pushed up. So this is my last level of support. And from there, once I got that break, then I automatically know I'm looking for a sell, especially since I'm coming off of a daily exhaustion zone. Would you wait for a bigger stretch before you get ready for an entry? I'm going to tell you guys, yes, you guys, especially if you guys who haven't been training for a while or new to the group, wait for your break-up structure. Wait for your retest. I'm a very dynamic trader. I've been trading for full time for about 6 months now. I've been studying the charts for years. There's a lot of stuff that factors into my trading style, the way I trade, that allows me to get really early entries, confident entries, stuff like this. This little bullish engulfing with the exhaustion wick at the end of this candle right here. This to me was a clean entry. I took that with no hesitation. We get a technical breakdown. I'll see your mental psychology. Yeah, I'll definitely delve into psychology. This was entry to me right off of this 1 hour candle, right? This was the break and retest off of the 1 hour time frame. So you had to break, retest. One of the things I always tell people, I don't enter off a 1 hour time frame, so I'm just showing you this just for the simple demonstration. I don't enter off a 1 hour time frame for one, and two, I never enter if I see a wick on the candle. If I'm looking to sell and I see a wick, that tells me seller exhaustion. I never want to enter on a candle that shows me seller exhaustion if I'm looking to sell. It's like an oxymoron. You know what I'm saying? It's like, why do that if you know you're looking to sell, but the market is telling you there's not enough sellers in the market right now for the sell, right? So you know, if this was a bearish engulfing, this wick would have kept me out of this trade, right? So let me go into a lower time frame. Go back up, and I'll show you my entry on this from a 15-minute standpoint. On a 15-minute, this is my last level of support. Market came up, found support here, rallied up, putting a slight higher high, broke it, retest. I'm in this trade somewhere right around here. Right, this is 15 minutes. This is your 15-minute entry off a lower time frame. I go on to a 5-minute. I go on to a 5-minute. Once again, this is my daily exhaustion zone. I know that already, right? Price comes in, bearish engulfing. This right here is my entry. Bearish engulfing right off that zone. Another bearish engulfing coming off that zone. Lower time frame let me know immediately that price is not going to stay in the zone. Pricing shoot up, pause, and go up higher. Price came into it once and immediately came out the zone. And so this is where having your proper technicals, your proper analysis on the charts comes into play. Help you get some of those early entries, right? When I take an entry like this from right here, I need all of about 11, 12 pips to have a decent stop loss, right? And with the way I trade, like I said, I'm very dynamic. I'm willing to take this 12 pick risk on this trade, even without any other break and retest confirmations, just because I know if I'm on the daily time frame, this is a huge ass rejection zone. So let me put this here. Make sure this is visible on my daily time frame. Yeah, it is. All right. And let's go back to daily. On daily, that would have been my entry. I think that's if I had that correctly. No, that's not because the zone is not showing. Never mind. Let me go back. That entry should be in the zone. There you go. Make it something big and bold so it can't be missed. All right. It's still not showing up on my daily time frame. Oh, there it is. It's like a little blot. No, it's not. I don't know. I don't know why it's not showing up. Anyways, you guys get the idea of what I mean. Like I said, when coming from that entry. But nonetheless, your safe entries, like I said, entries that you should have are the break and retest entries. So break of this neckline, right? Pull back right here. Like I said, I entered on candles with wicks. It shows me there's some exhaustion to it. So even if I seen this, I would have waited until I got some kind of more confirmation for that sell. And if you had took this sell here and you use the proper stop loss coming back above that high, like right around here, which is kind of a high pip stop loss. Like I said, that's why I hate taking entries on with wicks. Entry would have been safe. That's a high stop loss, but nonetheless, your entry here would have been your perfect entry. Put above back at the high, zero drawdown, and you'd have been all in this entry. Look for sells in a buyer's market. You look for daily zones that are strong reversal. Yes. Your sells, your reversals are always going to come off of a major zone, like always. For example, this whole bearish push, market came down. Let me draw my fibs real quick. Market came down, 61.8 retrace. It dropped, pulled back up again, make a slight lower high. Came back down right into that daily zone and immediately reversed in trend in that immediate trend. So that's how we got this bullish push right off of that daily zone. Huge ass bullish push, literally from the 28th of June, come all the way back up. So almost like a full month later, every 20 days later, something like that. Came off the dead exhaustion zone and then dropped. You hold through counter trends or exit or re-enter. I do hold through counter trends unless price breaks 38.2. So in the case of GJ, when I was in this sell coming off of this zone, once I had my area here mapped out, this is my first point right here. Price never broke 38.2, and so I kept that trade in. I kept on dragging my fibs. Dragging my fibs down. Right? Price never broke 38.2. I stayed in the trade. Came down here, and I had this as my target for my sells coming in from yesterday. And I think I got out somewhere right around here because I was already done with the market. I was collecting a bunch of pips. I was ready to go sleep. Like that was it. A little bit bigger. You guys can see it better. You scam the trades, and if so, how? The way I scale into trades, I don't do it all that often. I usually get a good couple of entries off the start. No, that's definitely. I get a good couple of entries off the start, and then from there, I just maintain my orders off of 15 or 5 minutes. If I was gonna scale into a trade, say you sold here off that break and retest, break 61.8, market came back beneath the line, bullish and engulfing, he sold here, then I would just use pullback points as my entries. Price came back up. You see we had some minor exhaustion here on the lower time frame when price did that pullback for us to get the sell entry. Right? These wicks. You see how market broke down? What did it do when it came right back up? Wicks on the opposite side and then dropped. Minor exhaustion on the lower time frame. Dropped. Pull back up to it, exhaustion again, dropped. So another entry point could have been right here. Yeah, Q definitely does go over a lot of this. I mean, if you guys aren't paying attention, like I said, I have a very dynamic way of trading. I break things down to my own way of understanding, and I use that to catch multiple entries. So anyways, I took a sell here, like I said, another entry point here. They had maybe stacked 1 or 2 entries. Stop loss wouldn't have been that big, 15 pips, right? So my entry here, it's now moved from a stop loss to a break even, and then break evens. This break even trailing stop matches up with the same stops as my re-entries. And then from there, I just follow the market down, and I just use the same fibs. Hey, Will's got the music playing. Go ahead and mute that for me. What's my specific trading session? I mainly trade London session only because I trade a lot of GBP pairs, and I get the most movement out of GBP pairs during London. Not that New York doesn't have moves, but a lot of times I get those movements that I love to see from London sessions. So I usually start looking at charts from around 9-10 p.m. Eastern, and I look to see what the market's shaping up to do. If I'm not in trades already holding trades, if I'm looking to get fresh entries, I usually get them somewhere between 11 to 1 a.m. and then from 1 a.m. to about 5 or 6, I get the market volume from London session to complete those moves. So someone says how I draw my exhaustion zones. My exhaustion zones comes from the wicks. Exhaustion zones will tell you everything you need to know about a trending market, a consolidation market, or a market that's in reversal. A market's about to put a reversal move. Right? I showed you that on a daily chart. On a daily chart, right? I had my wicks here. Market is exhaustion. This was buyer's exhaustion. It turned into two seller candles, and then dropped hard as hell. This lets me know there's a lot of supply in this area, right? So all I'm gonna do is just highlight that area as an exhaustion zone, point blank. That's simple. If I go to 15-minute time frame, just in the same area, you see where a market gave me seller's exhaustion and then rallied back up for a short pullback. Highlight those same wicks. Market came down, broke through this level, it comes back up to retest that zone that it broke through. Retest the wicks, puts the new wicks to the top side as buyer's exhaustion, and drops. Do that again. I had wicks here, seller's exhaustion, market went up, dropped, kind of broke through it, picked up some liquidity into this in this zone right here, came out of it, retested it again. Bearish engulfing pattern, another entry. We'll continue riding this market down. Stops go above. And this entry, beautiful. Yeah, man, the market is very simplistic. Like you'll be surprised and just like how the basic stuff just ties in with each other. And like so, like I always tell people lower time frame stocks because like there's a lot of little details in the lower time frames that you guys can take advantage of if you just pay attention. Like for example, look at my 15-minute chart. Market fell down, dropped, gave me a new lower high point. Market came down, rallied up, gave me a new lower high point. Right? Just mark that off as my new low high point resistance. Tested area. Right? I get a break, I get a pullback, and a shoot up. Market shot right up. So if I want to take this trade, nice little buy opportunity. Click out maybe like 20, 30 pips off of that. But you notice as the market's coming up, steady putting higher lows. This is by same areas. This is about a tested higher low. Retested the same zone and pushes up. Oh, by the way, this zone, guess where it came from? Exhaustion. That's it. Exhaustion, baby. Market came down, came back up, found exhaustion in this area. Exhaustion, right? Kept on rejecting this area. When it finally broke through, enough momentum, it came back and retested it. But that same area that was buyer's exhaustion became seller's exhaustion. So pretty much these zones, the way they work, whoever is in control of the market is going to act as either support or resistance. Someone says the problem is that they see sellers before just after the fact. The only way you can do that is just by trading your eye to see the market. It comes with time. If you're just starting off, you won't always see the setup exactly when it happens or as it's forming. Like as you continue to trade, as your market intuition gets better, as your eye to see the stuff, see the charts get better, you will start to see the market as the move is happening in the same way I do. So anyway, like I said, whoever's in control of the market at the time, that's where the zones are gonna show you if it's gonna be support resistance, right? Someone says, do I use trend lines? Yeah, bro. If you go on my daily chart, you see trend lines. Trend lines. I mean, trend lines do come into play very nicely. When I was riding this market up, I had a trend line for about like right like that. So you see as the market was coming up, kept on respecting this trend line, never broke it. So that was like a nice little way to go with that buyer's thing. Someone says, The biggest thing I could advise you guys for psychology before I even get into all that is that for one, the market only works in three ways. I was talking to Edgar this morning. He was telling me four, but literally, it's gonna trend, gonna consolidate, and it's gonna reverse, point blank, right? So if I'm in a trending market, if I know the market broke my last lower high point, right, and is not putting in a bullish candles or bullish like short term bullish trend, then I know anytime I see bearish movement, it's just a pullback. That's all it is. I want it as my personal preference. That's why I use that. Would you consider value 30 up to retrace wick or bar? I prefer a bar. I always prefer a bar, but once again, because my price action and my trading skills are very on point, very dynamic, I trade off of what I see, regardless of what Fibs is telling me. Like if I'm trading, let's just remove Fibs for example, because this is one thing I've taught people in my inner circle. Don't limit yourself to having a shitload of stuff on the charts just for you to see the market and take a trade, like at all. If I'm trading and I know I have this zone right here, this minor seller's exhaustion, the market found support in this area, liquidity, and rallied up. Well, guess what? When the market breaks through this zone, I know I'm looking for a break and a retest. Point blank. Market found support here on the on H4. The market broke through with a huge ass bearish engulfing candle. I know a retest is coming, and when a retest coming, I'm looking to sell. Right? So even without any fibs, how easy would this trade have been? Right? You know you have a level of support here on the H4 time frame. On the M30, see the same thing. Market broke through it, retested, bearish engulfing. What more could you need to take that trade? Break retest. And you know the market works off of a break and retest because I mean it's literally that simple, right? Let's take away the zones. Let's take away the fibs. Let's say you just had a naked chart. This was all you were looking at, right? You see this pattern right here, bearish engulfing on M30, right? What more could you need to take that trade? And if you took that trade into the right here, you needed all of about 23 pips to get a point, or 24 pips to get above the highest weight, 25, call it 25, right? 25 pips, if I'm on a point 10, I'm going to risk $25 to take this trade. If the trade works, it works. If it doesn't, it doesn't. We just got to go above the engulf, go above the top. I had to put my stops 30 pips. Like every trade I take, my stop is always 30 pips. Whether it needs 30 pips stops, whether it needs only 15 just to be safe. Just my rule of thumb and my risk management, I always throw a 30 pip stop on a trade just because it's just how I operate. It gives a whole lot of wiggle room, a whole lot of room to breathe. I mean, there's plenty of trades where I take where there's no drawdown whatsoever. It's just instantly in profits. But I always take a 30 pip stop. And before I take a trade, I always measure out what my stop will have to be to get it to a nice safe point, even though I'm always going to take 30 pips. Because that gives me an idea of how much I'm willing to risk in my risk management. If I know my stop is going to be 25 pips, and I know I only want to risk 2 to 3% of my account on that trade, well, then I say, okay, if I have $1,000 account, then 1% is $10, so 3% is going to be $30, right? I only want to risk $30 on this trade, and so for me to get a stop of $30, then I know I can use a 0.10 safely in this trade. So I'll just throw a 0.10 in, and that 0.10, would have banged out like $150, 152 bits. And then as I'm entering orders on this trade, I can multiply the 152 pips into possibly a 300-400 because you guys see my entries. I'm always in at least 3-4 inches at a time, and maximizing the amount of profit I get on each individual move. Someone says in these retests, and what time frames do you normally look at them? I look at the retests in any time frame, bro. It doesn't matter. I just need to see that level broken on the time frame that I analyze it on. So if I know this is a support level on M5, which is it was, M15, which it was, M30, and H4, I just need to see that clean break and a retest come out the zone. And so I can literally have watched this market fall, break this level on M5, watch it push back up. Like I said, no fibs necessary. This is just basic price action. And I see them as the market got beneath it. I can say, okay, this was bearish engulfing, but it didn't get back. Actually, let me see. That's thick. There you go. Bearish engulfing. Boom. Okay, I like the way that looks. I can take this trade. M5 coming out. No. 13 pip stop. Or if you're scared, you can say, hey, let me wait a little bit more. Market now falls. All right, this candle has a wick on the end of it. I don't like that. This is more like a doji candle. I don't like that. Indecision candle. I don't like it. Not take the sell there. Right? Bearish candle again. I mean, you just had 1, 2, 3 more bearish candles. But you say because I don't like the way they look, I'm not gonna take it. Right? This candle has set exhaustion on it. I like the way that looks, I'm not gonna take it. This candle fits. Bearish engulfing, no wick to the downside, had a small wick to the upside. Right, entry here, stops go above. Again, just write that marker down.
You got red 137 this morning.
Literally, just like I said, using lower time frames.
Yo, can you kick Arista, please? Thank you.
This shit.
This is that zone where I took my early entries from.
Right.
But there's another example. No fibs necessary. You can throw fibs if you want to. Especially influence. I'm not saying you can. I'm not saying you shouldn't. But I mean, how simple was it? I'm off of a daily exhaustion zone. Speaking, man, you got to mute yourself, man. I hate to kick somebody off. All right, good. Guys, I was getting kind of annoying. Let me go back down to the questions. 1 second, guys. This shit acting up. There you go. All right, so like I said, once again, support, last level support as Marco's rallying up. Support, break up support, right? Huge ass bearish engulfing candle coming off the M5, lower time frame. This would have been your entry right here. Go ahead and mark this off. Just so you guys can see what it looks like on the higher time frame when you're entering off this lower time frame stuff. So bearish engulfing, you have an entry here. Market does a little retest again of this level, bearish engulfing. Entry here. And if I go to my 30-minute time frame, you can see literally you would have been entering in off this wick. This is my entry here. And once again, M30, break, retest, immediate retest, and market rejects. By the way, this is something that I picked up in price action. You got right here. This is a break and retest. I know Q teaches that market has to break the support level and puts another candle, but sometimes market won't do that. The market will literally just break, immediate retest, and then drop back out and come off of that, come out of the rejection and continue falling. Right, so you guys see that here. Once again, lower time frames. My entry, just basic price action, no fibs necessary. None of that. You definitely use fibs for confluence. Right? I go up here. Support. Market attempted to rally off of this support level. Broke it. Retest. Enter. Enter. Entry again. Stop. Pull back. Oh, look what it did. Get rid of that. Broke this minor level of support. Retested it. Nice bearish rejection candle. Another entry. Literally, you just had 1, 2, 3, 4 entries, all within like a 4 or 5 pip range. Stops go above the high. You're coming off of a daily zone. You already know that, and you just murdered this whole sell from these 4 entries. So just from this entry alone, that's about 40 pips. 44, 45 pips, or 85 pips now. Right, this entry here, because another 120 some pips, and another entry. Boom, 180 pips in, 160 some, about 170 pips in, all from these entries, 5-minute entries right here, lower time frame stalls. That easy, that simple. You just got to train your eyes to see it. Like I said, fibs not even necessary. Just that simple thing right there. And so as you see the market starts to transition, starts to make lower highs, lower highs, lower high, rally, lower high, right, drop, like very minor pullback, drop, pullback, drop. Now you can see the market. This is an example of market transitioning. But you had a break of minor resistance, bullish engulfings, and you see all these bullish engulfings. Price keeps on trying to push back down into this level, rejecting off of this support to resistance. See, price keeps rejecting it. You see, as it rejecting it, it's consistent. Keep putting in lower high points. It's not going lower, going further down. So this is the market transition. So GJ, like I said, was a very easy sell, just using price action or time frames, maintain the trade on an M30 if you're swinging it. Like I said, if I'm swinging on a trade, I just keep dragging my fibs down, and unless price breaks 38.2, I stay in my trade. Point blank. Point blank, stay in the trade, and you would have caught this whole drop. Just look and see if price was coming past 38.2. That's simple. Let me switch over to EU real quick. Someone said they wanted to see how I caught that EU sell. Let's see. So we go to H2, 4. Let you guys look at my chart real quick. You guys can see that there. If anyone was wondering why I have full quarter point, half quarter point, I've never read anything on quarters theory. I just know the basics of it. And I know that even numbers in the market are psychological errors in the market. Like, this is just literally the way the market works. And so I don't use quarters theory as a way of TPing or stop loss or anything. An even number in the market, like, it's going to react to it. It's either going to reverse off of it or hover there and push through. Right? And so you guys can see the market was coming down, rejected this 1700 even number once, twice, broke through it. Right? It served as resistance again here. I mean, all of this was a zone, by the way. All that was a zone. I always highlight my exhaustion zones. Because when price finds kind of exhaustion in the area, and it breaks through that zone, guess what's going to happen? It's going to retest that same zone. And the reason I say zone is because support and resistance is not just a line. It's not just a static line you draw on a chart. Support is very dynamic. Resistance is more than just one particular price point. Because you can't possibly think that 1658573 is resistance in the market, and just that price point alone is resistance. No, this whole area, it could be 1573 all the way down to 1543, which is 3 pips, or 30 pips worth of area in the market as support. And that's how these exhaustion zones come to be, because this whole area from 1.5385 all the way down to 1.50977 is all that is support. And you can see that because when the market comes down into this area, it rallies back up. There's a lot of demand, there's a lot of support within this area. It's not just one line. You see, we have all this bullish wick, all this seller's exhaustion, right? All that seller's exhaustion every time market comes down to this area. This lets me know there's a lot of demand in this area. And so as price comes down into it, it's gonna keep on trying to push through if it's a seller's market, but ultimately demand was too strong. And so on higher time frames, you just see a long ass wick, but on the H4 time frames, you see these candles. Why? Because there's a lot of support within this area here in the market, right? So this even number of 1,600 and between 115,500, there's demand here. Point blank, and like I said, it's evident in the price section. So someone asked me, someone wanted to know how I caught this sell, this buy. This buy was pretty easy, right? Coming off of this area right here. Also do this and just drag that over. What do we have? Tested area, right? So the market was pushing up, broke this this last minor lower high point from right here. This became my new high low point, and market pushed up, and then dropped. Transition right around here, right? I should delete this. He's pushed up, dropped, came right back into it. Respected this level. Bullish engulfing on H2. H1, I had a minor level of resistance. This is a subject I'm going to cover for you guys so you guys understand this. In a market structure, you have major structure and you have minor structure, right? Your major structure is going to be H4. Your major structure is going to be these H4 levels. All right, so we're starting from here. We have resistance here, H4 resistance, right? If I just to drag that here, market final resistance here, you have a minor zone, highlighted by the wicks, right? Just like that. I know when the market is actually no, the zone is straight over there, so that's more accurate. There you go. Right? Resistance. I came into the zone, tested area, came back up, huge ass fucking tested area. Had a zone here, had a monthly level here. So anyway, let's just follow this down. Resistance, support, next level of resistance, retesting this broken support, right? Drops, rallies back up, tests the same area, drops, more of a consolidation, drops again. This will be like a minor point, not a real structural point. So this is my structural point, structural point, structural point, structural point, right? Minor point gets broken. And so when I have a break in minor structure, this lets me know there's a possible reversal in price coming in. H4 chart, minor structure, major structure points, and these are my minor structure points. So I go to H1 and just go to my left. What do we have here? Breaks in resistance, breaks in minor points of market structure. And so when I have a break here, this is my last lower high point on my H1 structure. Go from here to here. Nope, 23.6, not a valid point. Go from here to here, 23.6, not a valid point. Market came back up, 50%. I tell him to drop. This is my new valid lower high point. Breaks it. Market starts to push up. This is my new higher low point. Higher low. Now mark this off as my higher low. Like if you guys are watching Influence Point 90, you guys will readily remember this because Q demonstrated one of this in the setups. My new lower high point, retest 61.8. Market final level of support here. That was tested once. and price and a rally up. Let's hit a new higher high. This becomes my new higher low point. Right, 88.6. Retracement, kind of a steep retracement. It turned into a pretty big rally. You can see I have some kind of wicks here. Level of support in the market. Right here. Right, so in price, I just move that up, nice and simple. Price found level of support here, rally, put in the higher high, retested that same point. Came back up, 179 pips. So if I want to take advantage of this buy opportunity right here, let me go down to lower time frames. Once again, that lower time frame sauce that I love to use so much. Once you master that, man, your entries will be spot on. It will be accurate. And as long as you're not lost in market structure, you can take really good, really good entries. Right, so we have that same retest off that blue line. What do we have here? A minor point in structure. Minor resistance, broke, immediate retest, bullish rally. So if you're entering off M15, your entry would have been here. You'd have had no drawdown. This is kind of a late move because I'm literally missing out on this much amount of pips, but you would have still caught all of this for 135 pips, which isn't bad at all.
You probably could have called it on the 5 minute.
Yeah, let's go to 5 minutes, break that down, and let's see where your entry would have been on the M5 using that same break of minor resistance and bullish engulfing patterns. So if I'm on N5, follow this market down, right? On my M5 chart, following the structure here, right? Lower high, lower low, lower high, consolidation. Market was maintaining this level of resistance, right? It drops, lower low, rallies back up, lower high, maintain this level of resistance. It drops, lower low, puts in a minor lower high point. As you can see, they're putting the bearish engulfing in terms of dropped, couldn't go anywhere, double bottom right off that level, went up, broke this level. So for me, my entry, I mean right around here, and I could break this down on M2 and M3 and get a break and retest entry clean just off this variation, because I'm pretty sure that's what I did. If I try to go to M3 or M2, my computer probably might not be able to. Not that it's slow or anything, but it's gonna be like a lot of like data to pull back and scroll back to. So I just stick with M5. But you can see, once again, if you want to go fib on it, using that same lower time frames, the 38.2 rejection, right? You ain't should have been on this candle. So you can enter it here. You know, because I hate entering on wicks like this. And so once I get what I need to see on my lower time frames, I didn't even go one step further, like I said, and break it down. Let me see if I can pull it up on M3. My computer will let me. Oh, this is a lot of data. No, I don't think it's gonna let me. Nope, it won't let me. Like I said, it sometimes won't let you go back no farther when you're on lower time frames. Anyway, go back to M5 and let me just go back to the area. There we go. So once again, break of minor resistance, minor point of structure, very, very minor, especially on a lower time frame, right? You had a bullish engulfing pattern here. Market breaks back above, breaks above, small minor retest. This could be a valid entry point, and somewhere in this candle could be another valid entry point. And there, if you just line the market structure up, you could have been looking for bullish variations to enter. Right? So if I establish this as a minor level in structure based off of this time frame, and I just highlight my wicks. I always highlight my wicks and I see my zones. Oh, market came back into the zone, bullish engulfing, right? Inverted hammer, bullish engulfing, goes back above. Another variation here, another variation here. And so at any point, one of these could be my re-entry point. Stops go beneath, 7-pip stop, very small stop. And let me just highlight this area. Just, let's say for shits and giggles, we entered here. And let me go to M30. Let's see what that looks like. Yeah, there's my entry on M30. I mean, M30 had a nice little bullish variation anyway, so you could have entered off of that even if you didn't want to use lower time frames. Entry here, and you just write that up. I mean, how easy would that have been without even throwing fibs on? All you used in that was price action, minor resistance, minor support, and a little rectangle to highlight wick exhaustion, extra confluence. I mean, that was pretty basic. So using that as my foundation, you guys should be able to understand why I bought here, why I was looking for a buy here. Why, as the market was going down, it established a lower high point on my 30-minute time frame. I already know there's a lot of demand in this area. I already know this is a psychological number in the market. Chances are market will rally from it. I know this was a support level on H2, H4 time frame. And so market came down beneath it and they immediately rallied up into it. Right? Bullish variations broke up above this minor resistance. And if I go to H2 time frame, market closed above that level, which means this level was not broken. It was respected on my H2 time frame, on my H4 time frame. And let me see on my H1 time frame. My H1 time frame was respected. Minor level, minor structure, resistance point broken, bullish, huge ass bullish candle. I like to call these vector candles because it's like a vector pulling the way to where the market's getting ready to go. A huge ass bullish explosion. Market pull back. At this point, my fibs would have changed. Exactly what I did. Right with the wick, I mark off areas of the market where the market immediately found support. So tested, retests. I mean, I was in this trade from off of the first test. Sometimes I wait for two. Yeah, I gotta watch on M30. So M30, you have a bullish engulfing. This was my first entry. This was my second entry. Right? The entries were pretty much right about the same. My stop was like 22, 23 pips. Nice and easy. If you had took that trade, you'd be sitting on nice sheesh. Market's still going. 2 o'clock on a Friday. 90 pips. Nice and easy. Break up my resistance. Huge ass bullish vector candle. Let you know what the market's getting ready to do. Rejection of this level. Tested area. Support area still being respected. And then rally up. Had a trend line here. The market's now attempting to break. It's good because I definitely see H4. Yeah, I definitely see UJ pushing up. So if I'm trading this currently, my first thing I'm going to do if I'm going to buy, I'm going to highlight possible areas in the market where price could stall, price could reverse, any of that. And where am I going to find that? By looking at areas of exhaustion. So point blank, I would have this highlighted because I know when the market broke through this level, it became resistance. And I'll just do that and watch to see what the market does when it reacts to this level. Last time it was here, it dropped down. Let me see. It dropped down like 154 pips. Sellers that stepped into the market heavily at this point and put this market down 154 pips. So chances are, when it comes again, it's going to need quite a bit of momentum to push through. So that's why, like I said, I always just highlight the possible areas of resistance in the market where market can stall or reverse from, and then I just watch to see what happens. I had my fibs on both my fib TP points would have been hit already. Actually, no, I'm drawing from there. Yeah, so first one got hit. Once my first one get hits, point A, point B, point C, point D, I move my fibs up. My fibs are gonna go up, and my last lower high point is gonna be my point A. So on point A, point B, you can see prices just rejecting this area. My new zone, rejecting 23.6, that consolidation area. I mean consolidation point on the fibs, market pushes up into awaiting resistance and supply zone. And my new 20 negative 27 extension is here, and my old 61.8 extension is here. As double confluence. Go ahead, bro.
Yeah, so you based your break of structure on the euro based on a 30-minute time frame.
Yeah, 30-minute. I mean, if you want to do it on a 1 hour too, you can still have.
Well, because here's the reason why I was asking. I was basing that exact same trade on a 1 hour, but I didn't see a break of structure on a 1 hour. But I see that you went down to the 30-minute, and it's very clear on the 30-minute.
Yeah. See, the thing most people get confused is what break structure is, right? So a break of structure is a break of a lower high point, a low or a higher low point, right? That's breaking structure because structure is lower lows, lower highs, and higher lows. That's structure, right? This is what you call break of resistance and break of support. And so when you have a trending market, if market breaks a support or resistance level and then retests or rejects that level, or in this case does a rejects final level of support, and then rejects it and then rallies off of it, that's where your pullbacks come into play. That's where your reversals come into play. And that's how market transitions into putting in a reversal to get a pullback to a higher point on a higher fib level. So if I'm on a day chart, and let's say, this is my last lower high. I put it down to here as my point A to point B, right? I would have had a transition on H4 and on H1 to lead me back up to here. All right, so let me just go ahead and show you guys that, because you can see here, I mean, this is the last lower high points. Until market breaks this, we're still in a bearish. Actually, no, market created a lower high point here and broke it. And so we're now pushing into a possible uptrend. Should the market continue to break this, get above this level, get above this monthly level, right? So if I just highlight this whole area, make sure you guys can see that on lower time frames. I'll show you how we transition from a bearish move, coming out of a bearish move into a bullish move. All right, so we go to H1. So H1, we had this huge drop. That was a daily candle. Market dropped on the level of resistance. On the level of resistance, right? Had a nice little drop, came back above, dropped again. Level of resistance. Draw a fib just on that point here. No, market even put in 38.2 on that drop. Not at all. So anyways, when you see, except this is that minor resistance come into play. This was that transition. When you see this market break this level here, or this minor resistance point here, you should already know you're looking for a buy opportunity. Right? So once you have this break, you have to retest, a big ass 100% retest, no less. But nonetheless, even if you're swinging the sell, you know the market is going to be transitioning, coming off of this daily zone. And so now you start to see that transition. Market comes up, it double tops its resistance point, drops back down, right? Finally breaks it. As it broke it, you have thrown up a fib, not that you need to, but thrown up a fib. 23.6 continuation. Minor level of support established here. Rejected off of it, bearish engulfing. And so you could have been in a trade here. Me, I'm in a trade down here off lower time frames. I'm not going to front with you guys. Like I said, my trading is very dynamic. Entry here, and then you could also have waited for Mark to have put in a valid lower high point. I don't think it's put in a valid lower high point for a while, actually, for 38.2, coming off of there. Let's see. I didn't put in a valid lower high point until literally all the way down here. Well, going off the 1 hour time frame. So, but I mean, like I said, at that point, I'm in a trade here and I'm in a trade over here. I mean, the market rate transition, it broke this minor level of support, bearish engulfing, rejection, and then you just write that down. Nonetheless, in the market structure, like I said, your lower high points, your higher high points, those points are structure. These points are minor resistance levels, right? So it's like when the market breaks these levels in a bearish trend coming down, that's where you get your transition, and that's where you start to see bullish rallies coming up for me to get a retracement. So let me delete this real quick. If I highlight all of this, area on a 1 hour time frame as my this would have been my bullish short-term bullish pullback to get my lower high point in my H4 chart. Right? You guys see that there? You had a transition, the break. Delete some of that stuff so just so it's not confusing. If what I'm saying makes sense, but so far, go ahead and let me know in the chat. The way I see it is very simplistic, but I understand some of you guys are new, so it may seem a little different. It may not be that hard, but I mean, hard to understand. Anyways, you saw how you had transition on H1, and if I broke it down to M30, you'll see the same thing, right? This was the pullback for me to get my lower high point in my H4. Yeah. This is as point A to point B, point C, and what do we know? Oh, is that a zone retest? I think it is. And so you guys can see how, like I said, price just isn't, resistance just isn't one line in the market, because this is where the support was. Market never came back up to retest that support. But yet it still retested this general area of the where price showed these wicks indicating seller exhaustion at the time. So price came back up, just barely touched the 61.8 retracement on H4. It's point A, B, C, D. And the market started transition going back up again. So that's the biggest thing to keep in mind. When you're trading, you can plot your higher low points. Like if I'm writing this market down, right? All this is one big push. Drop again. Drop, rejection off the zone. Pushes back up. Got above this minor resistance level. And once you got above, I'm looking for buys. Right? Because once again, when the market breaks those minor resistance levels, this is not a valid lower high point. It's just a H4 resistance level that got broken. So once I get that, I know I'm looking for buys, because if price was going to drop, it wouldn't break a resistance level. Right? If I'm in a bearish market, the market's putting in lower lows and lower highs, lower high point. If it breaks this level, that means I'm going to be looking for buys. if I'm in a bullish market, riding this up like that, support, 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 right? Up, down, up, down, up, down. When the price went up, it came back down. It should have went up again. If it's a bullish market, it didn't go up again, did it? It broke. So you have your retest, bearish engulfing on H4. You have a nice ass drop, retest at that same level, and another nice ass drop. Right? So a price is putting in a bearish market, a bearish trend, whether it's a short-term bearish trend, a long-term bearish trend, based on the time frame that you're looking at, it shouldn't ever break resistance points. Because if it breaks a resistance point, that lets you know there's going to be a reverse or a trend change or short-term pullback coming in. Right? I'm looking at this cell coming from here, lower low, lower high, lower low, lower high. Like I said, lower low, lower high, lower low. Make a small consolidation area, right? Market establish this area of resistance first with this candle. With this candle, right? This little bearish candle right here. And I know if the market's going to continue going bearish, it should drop. If my level resists the market, it should drop. If the market breaks this point, that means it's no longer going to keep on going bearish, right? Established level of resistance, respected, huge ass drop. Level of resistance again, drop. Level of support, couldn't go past this point right around here. He had a lot of wicks, right? When market breaks this level of support, you level of resistance, minor resistance, minor structure, not major structure. Major structure, your lower highs, higher lows, all that good stuff. Market breaks this level and breaks this level. I know I'm looking for a buy opportunity. Point blank. So this is how you get that transition from a trend to a pullback. Trend to a pullback. Pullback back into the trend. Right? Exhaustion. My buy opportunity is coming off of here. Minor level of support is established. Just drag that over. Right, respected, bullish engulfings, all type of bullish variations. Write that back up into a previous exhaustion zone. Right around at a monthly level. Right. My negative 27 extension fibs got hit, 61.8 almost got hit. But I mean, like I said, this whole rally was good from 168 pips. And if I break this area down, I guarantee you'd have seen the transition on a lower time frame first before you even got this whole bullish move. If what I'm saying makes sense, let me know. Yeah, this is perfect. Market drops, establishes a level of support. My resistance gets broken. All right, follow it out. Get me a point of entry. Rejection off is 38.2. This is like a wick area, but this is where my zones come in. Right, this was a minor level of market final resistance here. Drop, market broke it, retested that same level, rally back up, inch off a 15-minute. Go to M5. It's too far back. Well, let me see it. But you guys get it. Let's go back over the most recent price action. So yeah, that should answer your question on how I get the trend, not trend, the price reversals, change in direction, change in momentum. Same thing in on GU. Except GU actually had, if you're following the market off of You see, it came back up, put in a 38.2, attempted to drop, failed to do so. It broke this minor level of resistance first. So this right here was a nice indication that the buy was coming. And this is how I knew to predict this buy, because I mean, like I said, the market was telling me everything it was going to do. It was literally predicting the move. Right, I have a monthly level based off of where my charts were. I'll scroll back to higher time frames in a second that you guys see. Right, I had a minor level of resistance plotted. Market broke that level of resistance, came back down, tested it, respected, rallied up off of it. Right, this minor level of resistance gets broken. I now have a higher low and a higher low and a higher low, and my higher low point kept on being maintained. Every time market retested it, it tended to rally. Failed to do so, tended to rally. So I highlighted all my bullish engulfing patterns. Bullish engulfing, and on the third retest and failure to break beneath, bullish engulfing for that entry. 130 pip move. Nice and easy. Lower time frames. I mean, shit, you take away the fibs, and you just look at price action, and you can see it. I mean, how smooth, how simple is that? Break, retest, 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 huge ass rally. I mean, you took the adjustments alone. One more because you need it. You could threw fibs on there. You could throw whatever you want to see on there. I mean, one more because you needed to take this buy opportunity. If I go to my daily time frame, look what we have here. Monthly level. Go to my weekly time frame.
Ahora, usted tiene que estar antes de la 1.
Sí.
¿Ah?
Sí.
Ve.
Somebody in trouble. On my weekly time frame, this is what you see. Right, this is the level. Market on rejecting it, broke through it, got hit to the exact T and rallied off of it. Month chart, look at that, being respected. All area. All this exhaustion, all this price action in this area, market respects that level nice and easy. Once again, monthly level is drawn by finding an area in the market of about 1,000 pip range at the high.
Venga, papá. Come un poquito de esto y cuando viene le sirvo más.
I don't know where I got this level off of. I think it might have been this. Something like that. That's how I plot my levels. And once I plot my levels, I just monitor my trades on my low time frames. So for those of you who are entering off of H4 time frames, waiting for H4 breaks the structure, and this is your entry, bro. Like you're just not waiting for market to break here, and now you're gonna turn around and throw a fib on this. Wait for a reversal, bro. That's dumb late. Like you're getting in like when there's, I mean, literally like 130 plus pips worth of market movement already gone, and this is where you're looking to enter after market breaks this level. Not that there's anything wrong with that. To each his own. If I'm gonna wait for a break of this, then on an entry, I'm getting in dumb late. Right? If I reverse this fib and throw it over here, if I highlight this as my support area, and this is my break, and then this is my pullback. A, point B, 61.8 retracement. You're waiting for that close at H4 enter the trade, bro. Look where you're entering. You're entering right here. You missed over 107 pips worth of movement. This is why I always preach that lower time frame salt. That lower time frame salt gets you on entries way before. I'll just break this down.
Papá, venga. Venga.
Whoever's the mic that is, man, you gotta mute that.
Tiene el aparato puesto.
What is that? Well, seriously, who is that, Mac? I gotta. I ain't had to boot somebody, but it's annoying. Bro, seriously, you're killing the vibe, man.
Que si ya ir a andar en bicicleta, yo digo que los que tienen alguna actividad así son más. Sí, sí. Está bien.
Tengo como 10 minutos para salir.
I'm not sure who that is, but that's annoying.
Eso sí le sirve, siempre le pongo un poquito. Tampoco no beben mucho para que se vaya y.
Oh, hey, I hate to kick somebody, but I mean the people who aren't muted, I know it's not them, so I'm gonna scroll down and kick the people whose microphone thing I see on, because it gotta be one of you guys. If you can help me find whoever that is, let me know. I'm still trying to locate who that is, man.
Yeah. Yeah.
I just need to know who that is and check it out.
Is it Jose?
It says there. It says no. It says Jose's muted his microphone, so I don't think it's him. Damn, bro, where you are, you being real disrespectful. That's enough for everybody else. I can't find my own thoughts over that background. All right. Is that Alfonso?
Una manzana. Primero usted le van a
No, it wasn't Alfonso. Check him out.
Mine says Jose.
Okay. No, it's not. I think I just kicked Jose out. Hold on, let me try. Yeah, I think that was it. Good, thank God. That was so fucking annoying. All right. I don't remember what I was gonna say. That's just so annoying, bro. Yeah, I was showing you why entering on H4 would be late. So if I'm, like I said, H30 entry, break up minus support, retest, bearish engulfing pattern. Entry could have been here, and boom, damn, 286 pip drop. Like literally all in just a huge ass fucking swing trade. Let me say that was my entry.